Hi, I'm Patu from freefincal, and I want to talk to you about why waiting for the market to fall can be an expensive mistake, especially for young earners. And if you notice, whenever there is turbulence in the market, there is volatility. There are people who are always asking, "Can I invest more now? Should I wait, or can I pause my SIPs? Shall I wait until the market calms down, and so on?" And this kind of fear of the next investment comes when you do not have much of money invested in the market. So let's say you're doing an SIP for let's say 5,000 rupees, and if you have just started a year ago, then you would not have accumulated much, right? At best you would have got like 50,000 rupees, and then you're investing 5,000 rupees. But imagine somebody who is already has 5 lakhs in the market, or 10 lakhs in the market, 50 lakhs, 75 lakhs, and so on. People who have that much money in the market, they won't be asking whether I can invest my next installment of, let's say, 25,000 or 30,000 or 50,000, or should I wait for things to cool down, and so on. The reason they don't ask is because they understand that already the invested capital is subject to the full force of the market. It really doesn't matter whether you invest today and tomorrow the market gains 2% or falls 2%. It doesn't really matter. The I think we need to get rid of this mentality of worrying about what happens to the market the day after I invest, or oh, today is my SIP day but the market has moved up. Yesterday was my SIP day, my money got debited, but today the market has fallen down, and so on. That childishness we need to get rid of and move away from. The reason is we simply cannot predict what the market does. Last week the mood was something, today morning the mood was something different. In the last hour or 30 minutes of trading, the mood completely changed. If somebody who had just before going to work, if they had looked at the Sensex, they would have seen it like 500 600 points up. And when they see it again, when they're having their afternoon tea and not looked at it at all, they'll be astonished at what happened. It's completely roller coaster day. This kind of chaotic behavior will happen over days, over weeks, over months. There's no control, because we cannot say, okay, I will make sure I will find a time to invest my money so that it will always be moving up in the future. That's not possible, because we have to invest. The market can fall 1 month after we invested, 6 months after we invested, 2 years after we invested, we will still get a loss. So there's really no control, and I think we should not be nitpicking and splitting hairs on when to invest. Should I pause? Shall I invest extra? It just doesn't matter. I've shown how there's a video on this, how investing on dips doesn't make a big difference. You can invest in dips. I'm not saying you should not. I'm just saying don't claim that you are going to get more returns. That doesn't happen. It just doesn't work that way. So my suggestion is to invest with a system in place. Systematic investment is just automated buying units. I am saying don't do systematic investing. You do investing with a system. Have a system in place. What is my goal? What is my asset allocation? What is my current asset allocation? How am I going to change my current asset allocation? Am I going to do any kind of tactical investing? Those are the kind of a plan or strategies that will help you not worry about day-to-day volatility in the market. Look, if you want money in the next couple of years, you should not be in equity today. You should pull out tomorrow. If already it's late, pull out tomorrow at best. But if your goals are 10 years away, 15 years away, 20 years away, then worrying about what happens in the next month or next 2 months, next 3 months makes no difference. You must have a strategy for the long term. Risk management is important, but you must have a long term risk management strategy, not worry about what happens over the next few weeks and so on. It's a useless exercise. You will learn that it makes no difference. You just cannot control it, and so on. So please focus on things that you can control. What can you control? The asset allocation can be controlled, the corpus can be controlled, your return expectation can be kept in place. your inflation expectation can be realistic. Once you do that, you just focus on the target corpus and how you are moving. This is what I do in the lectures for goal-based portfolio management. We do that in this Facebook group or series of videos. We talk about how to handle sequence of returns. Whatever happens, whether the next 6 months becomes negative or next 10 years returns are practically zero, it doesn't matter. You should still be able to reach your corpus. So that's the kind of strategies we talk about. You need to evolve your own strategy. I'm not saying that's the best. I'm not saying that. But you should evolve your method in which you are going to control your equity exposure, because ultimately that is what is going to make you sleep in peace. See, I can keep running SIPs, but after 5 years I would have accumulated some capital. That capital will face the full force of the equity market, and I must be able to sleep in peace. I can't sleep in peace if I leave it to luck, because all these advisors keep saying, "Oh, have a long-term view. Everything will become okay in the end." That's just garbage. I mean, it's baseless. I have shown in those lectures that sequence of returns, negative sequence of returns, sideways market, even a big crash, early in the investing tenure, in the middle of the investment tenure, late in the investment tenure, it can kill your dreams of achieving your target corpus. So work on those things. Those are things you can control to a very, very nice degree. You cannot control volatility. You don't know what the market's going to do. I don't know. Some people say Nifty must hit this level, that level. I mean, they talk like as if those numbers are. I mean, it's like a mantra, and Nifty will follow that mantra, and it doesn't work like that. It's just too chaotic. It's chaotic and unpredictable. What we can do is factor in the unpredictability and make sure we are at all times close to our target corpus and invest the necessary amount. And we have to keep investing systematically. Our time is much better spent. I have only one message here. Our time is much better spent focusing on managing risk associated with the invested capital, instead of worrying about when to invest. Shall I invest more? Shall I invest extra? Can I pause my SIPs? Can I do that? Don't worry about the investment that you're going to do. Worry about the invested capital. And if you take that view and focus on the portfolio rather than the amount you put in, I think you will be able to sleep much better. You will be able to achieve your goals much better, provided your plan is in the right direction. So please have a plan. Either you can change your asset allocation tactically. I have a market timing tool for this, or you can do it systematically. I have lectures on this. Do give these a look, find out what method works for you, and please adopt one. Have a plan. Invest with a system. Do not just invest systematically. Bye bye.